I've been also investing in venture capital for many, many years. That's something, if your profile is that, you might be looking into, investing into those. But real estate is where I find the leverage comes in. The leverage is big thing, and tax advantages. And the other part I like about real estate, hopefully you do too, it doesn't go to zero overnight. If you buy in the right areas, the multifamily also, I bought so many doors, and we were able to increase equity gains, is the word, by value add and everything, and made extremely great returns for investors. But right now, I don't know if you have invested in some deals which are not cash flowing, but that has been a kind of troublesome in the last 2, 3 years and so on, with insurance costs going high and rate locks not being there and things like that. Industrial, really big, by the way, with the e-commerce growth right now. I hope you are able to look into logistics and the industrial sector, which I am also looking into that, by the way. I'll be learning and teaching as we go on. Some of my very good partners and friends, they are into industrial and they have done really, really well. Healthcare properties, now that's something I'm going to talk about today, which we'll talk about, and also the tourism also we'll talk about. Opportunity zones, tax advantages are there, but I've kind of shied away from opportunity zones because they are the depressed areas in any metro area where you get taxes and all, but you don't know how other people around there will be putting money and how the development is going to come and so forth. I just kind of stayed away, but it's, your risk profile will let you, kind of look into that. Of course, private credit is not bad, not bad. Being a bank is a good thing, if you find some people who are able to, that you can vet the deals and direct lend to people through your IRA or retirement plans or like that, not bad at all. If you know the people and they have good track record, that's the key. That's the real key. Real estate debt is not bad at all. Again, mezzanine senior loans secured by the qualified properties, you want to make sure you are right behind the senior loans, senior debt, then your debt, then comes their investors and so on. So the real estate debt, or yield I call it, is pretty good deal actually. As a matter of fact, we are planning right now with a good solid returns. Again, I'm not selling any security. If any one of you or people who are watching it later on, they want to reach out to us, to me, I explain, like we are giving like 10%, 11%, and 12% hard pref, we call it. What that means is it's a yield, you get 10% net. It's not like you get 10% and then you are in the 30% bracket. Now you take away 3% to taxes for Uncle Sam, you are left with only 7. What we will do, we'll be giving the cost segregation, accelerated depreciation negative, so that your 10 is real